All right, now we're going to want to switch gears. I'll get it out. Let's talk about China and the move on interest rate and really its impact today. We've got Jamie Metzl. He's Executive Vice President of the Asia Society. He's a former Deputy Staff Director, Senior Counsel to the Senate Foreign Relations Committee. And when China's premier was here in Washington last month to really meet with President Obama, Jamie actually had a chance to meet with him as well. So great to have you back with us.
Thank you.
Matt and I loved talking to you last time around. So make sense of what China's doing at this point, because investors that we talked to, traders, said this is what really mattered to the markets today.
Well, this is a big deal. I mean, China hasn't raised its rates for almost 3 years. They raised by 25 basis points. It's a small thing, but it's important, symbolic. It's been 3 years, and it indicates that China is tightening. Why is China tightening? One, there are a lot of inflationary pressures. They've had about 3.6% inflation. That's a lot. And when inflation gets to be more than the money that people are getting from putting money in the bank, it encourages a lot of hot money. And what does that do? That leads to a lot of real estate speculation. So China now is facing what many believe, I believe, is a real estate bubble. And so they need to tighten their money supply. They are being responsible. And
it's also interesting, Jamie, that they have a lot more control over their rates on the shorter end of the curve than we do, right? When they raise their rates for lending or borrowing, the banks listen.
Absolutely, they do. But we also have a lot of control because this can't be considered outside of the context of quantitative easing, the QE2 that everybody is talking about. So we're talking about loosening our monetary supply. We're loosening, they're tightening.
Well, is that in direct response then to what they're anticipating?
It could be it probably likely is a preemptive move on their part, because as we go into quantitative easing, we increase our money supply. There's more money that gets invested in China. That creates more inflationary pressure, and that's going to be a problem. So I think it's a pretty responsible move. But what you're seeing in the markets is that if they increase their rates, there's less easy money in China, and so the kind of explosive growth that we've seen will be cooled down.
It's certainly a move that surprised the markets. Do you think, though, it probably surprised the folks in Washington, considering everybody's just held a bunch of meetings here?
Well, that's the big question. I mean, there have been rumors that there's some kind of deal leading into the G20. I have no idea whether that's true or not, but it certainly could be. I see this as responsible behavior by China. There still is the enormous outstanding issue of the valuation of the RMB, and in some ways China is taking pressure off of their economy in a way that doesn't require the revaluation or the appreciation of the RMB. So it's a very complicated mix.
What about the rare earth metals? I mean, they stopped shipping them over here. They haven't been shipping them to Japan as well. Is this a shot across the bow?
Well, this is a big deal. When China stopped shipping to Japan after their incident in the East China Sea, I mean, that really scared people in Japan. Now that there are questions about whether China is going to be using its monopoly position in rare earths to exert a lot of influence over not just Japan but the rest of the world, it's a big issue. Rare earths aren't all that rare. It's just very difficult and dangerous to mine them, and so China now is responsible for about 95% of global exports of the global resource of rare earths. And so if China is going to be using this monopoly position, that's a big deal, and it raises the larger question of economic stewardship of the system as a whole on issues of rare earths, issues of currency valuations, issues of trade, issues of state involvement. The United States has really set the tone of the global economy for the last 65 years. China is rising as a player, and there may be a new set of rules that are emerging, and there's going to be a lot of discussion in G20 and elsewhere about what those rules are going to look like.
Who's going to get hurt the most potentially in that rulemaking?
Well, it depends. It's going to be a different balance. And
with China the clear leader?
Well, China is a leader. The United States, I mean, people shouldn't count the United States out. We are still by far the largest economy in the world. We have enormous influence. And right now, for example, on the issue of the valuation of the RMB, the United States isn't the lead victim. The people who are being hurt the most are people who are workers in developing countries, because if you're in one of those countries, how could you possibly produce anything if you not only have to compete head-to-head with China, but you also have to do so with a 20 to 40% premium because of the valuation of the currency?
What do you think about, you mentioned that there could be a bubble, a property bubble in China. Jim Chanos has come on and told us the same thing.
Right.
And for that reason, he thinks that the RMB is already overvalued, that it should sink. What do you think about that thesis?
I wouldn't agree with that. I mean, there are a lot of people who have a lot more expertise than I have, but when I look at the studies by the IMF especially, but also by others, I mean, the range that I've read that seems reliable is about 20 to 40% overvaluation.
I want to go back. So this is probably the beginning, though, of more rate increases by China.
Probably. I mean, it looks like they're moving in a direction of tightening.
Will they be
and so
aggressive?
This is a small. I think they're going to wait and see how the market reacts. It looks like the market is reacting, and so I think that they probably don't even know now. But they've been seeing a lot of appreciation. The Shanghai stock market has been going through the roof recently. Inflation has been increasing. So I think nobody wants to move in a heavy way. You want to take little steps and see what happens.
We got to run. Jamie, always good to get some time with you. Thank you so much.
Thank
Jamie
you.
Metzl over at the Asia Society.
All right, coming up, we're going to talk about marijuana. We'll take a look at the biggest pot bust in the history of Baja California, which comes at a pivotal time for the state's relationship with cannabis. How could you not want to watch this?
As I said, there's a tease.
That's right.
Plus, we'll talk to the CEO of a company that's making money despite all the volatility of the markets. That's coming up in just about 10 minutes from now. Stick around. Matt and I'm back in a moment.